What's going on, guys, and welcome back to the channel. Don't forget to like, comment, and subscribe to the channel. And today we're going to be doing not a trade recap, but just kind of like a daily analysis. So let's look at the S&P 500. I'm in an active trade right now looking for sales at the moment because we had this high that created this low right here. And now we're in kind of like a consolidation, but I was buying until we broke this low. So now we may get a push down holding this trend line that's up here, right here. But we do have an imbalance sitting right here that we may end up rejecting off of, creating low resistance liquidity to the upside and then breaking this trend line and heading higher. But right now I'm taking a risk on sales continuing down further, and I'm just going to keep it right here. It's going to be 93 bucks on this combine, and I made 166 so far today. So we're just going to see how this one plays out. But looking at the S&P 500 overall, we had this low essentially create this high, but this high ended up sweeping all of this liquidity inside of here. We swept this high, this high, this high, this high, all with this push. So we did also get an imbalance created on the S&P 500 inside of here, which I want to see price come back into before we head to the upside. If you guys watched the last episode or trade recap that I had mentioned, you can see that we kind of are notorious for tapping into these imbalances before heading to the upside. A lot of people hate ICT concepts, and I don't necessarily follow ICT per se. I've only watched like 2 of his videos, but that was like ages ago and I just couldn't even follow, so I kind of didn't follow. But I still use some of the concepts because that's just some of the things that I've learned from other people. So right now this is the structural highs and lows that I'm seeing the S&P 500 create, and also want to see it maintain. So I want to see a pushback somewhere into this imbalance and then a pushback to the upside. Now, we do have a lot of liquidity that is resting to the downside of the S&P 500, and we also have relatively equal lows right here as well. So with the sweep of this high on the weekly chart, this is the weekly chart, might I add, I could definitely see us continuing down further from this weekly sweep. Now let's go down to, let's check the daily really quick. The daily time frame was the same as the weekly for me. This is my daily high, low, daily higher high, and we broke that structure right here. And as you can see down here, I was a buyer and I ended up buying. You can see we have liquidity right here, and then all this liquidity right here, and we got a strong push after a strong push down. And you can see we started creating imbalances again, leading us further to the upside. So let's also check out the 1 hour time frame. And let's also take a look back at that trade really quickly. I was just teaching someone earlier about this, and that we didn't want to see a candle be created in this imbalance zone like that. You typically want to wait for a candle closure under your structure. So we had this high that created this low, and then we pushed up to here, and now we're kind of dipping lower. And I want to kind of see these candles maintained and push through here and then go lower. But you can see we're kind of rejecting at the moment, so we could really go either way. Let me go back to here. Okay. So this is December's price action, and for me, December has been fairly rough. It's been pretty ugly. We've had pushes in, excuse me, all directions, man. Like just everywhere. It's been very, very ugly, in my opinion, price action to trade, but I have been trading it. And it has not been fun. This is kind of how I see the price movement at the moment, just so you guys can get a feel of the way I kind of map out my structure. And this is essentially how I trade. I look for the swing highs and swing lows. And then within that, I look for an imbalance. And then I look for a trade in the direction that I'm going in. And right now, it looks like we are slightly bearish on the 1 hour time frame because we had this 1 hour break of structure lower. But we broke with a sweep. We broke with a sweep. We also created a 1 hour imbalance inside of here. So we could come back into this 1 hour imbalance and then pop higher. I always give some type of respect to imbalances because it just shows the strength in price. Like that's the only reason I use it. That's the only reason I label it. If you have a strong push in any type of bar chart, there are imbalances or inefficiencies, as some people would call them, in the market, which is just you have 3 candles and you get the line in between it, or the wicks, and in between those wicks shows you imbalance. In between these 3 candles, the 2 wicks, you get imbalance. And imbalance shows strength in the market, and then you would expect that we would get a reaction from that strength that was displayed in the market. And that's essentially why I use or label imbalances. That's a logical reasoning behind it. This is a good example. We have an imbalance right here as well as right here. What does imbalance tell me? It tells me that price movement in this area was strong. When we come back into it, I expect a rejection somewhere to sweep liquidity, and then for us to go down even lower. And you can see we ended up taking out this low before going higher. Now, in some instances, of course, you can't just rely on imbalance. That's why we go to lower time frames and look for a structure to be aligned on the lower time frame so that we can capitalize on the higher time frame movement. So this is a quick example. If this was my 1 hour structure and we had an imbalance inside of that 1 hour, I would want to see price come back down on the 5 minute or the 10 minute, break structure with imbalance or impulsive price movement again, come back in, and then target possibly this high, or even higher. And that's literally the only reason I use imbalance, because of a logical explanation of it. An example is price also right here. We have imbalance created right here as well as right here. We have a break of structure to the upside. And now we have a rebalancing of the imbalanced price action. We come and also take liquidity, and then we head and we break the next high. And that's literally all I do. Let's take a look at gold. Let's also check this position. We're still floating. We're fighting. Let's check gold and see what gold is up to. But it's essentially the same for all assets. Look at that. Look at this right here. We have a break of structure right here. This is a break of structure. We close above. We create demand in this area. We swept liquidity right here. We created imbalance right here as well as right here, showing us that price movement was strong. We also have imbalance right here showing us price movement was strong down. But this swept a ton of liquidity. We're also we're in a range, so we're not necessarily more bullish or bearish at the moment. So either one of these probably could have won. But you can see this wave or this push is a lot larger. And then once we come create this liquidity, we sweep inside of here again. We close back fairly bullish. That could have easily been a trade to continue to the upside. Stop loss under there. And then, of course, take profit wherever you deem fit. Now, you get scenarios like this where there's an imbalance on both sides of the market. There was imbalance right here. There was a little bit in here. And then we have imbalance right here as well as right here. Now, I would be anticipating possibly lower prices because we have liquidity right here. We have a strong imbalance inside of here. And if we get structure to realign with this push down on the lower time frame, something like this on the lower time frame, then that would be a good spot for you to take a sell. And what I mean by that is, right now this is the 1 hour. I'm gonna go to the 5 minute. You see how we just had this break of structure down right here. This could potentially be a spot where you would want to take a sell at, because we had this break of structure down. You could take a short position inside of here. Stop loss could be up here or right here. And then you can look to target some type of liquidity or a low down here. And that would be a 6.8 R trade. And this would be a 12 R trade. Now, let's say this trade lost and we did something like this. You could take that trade again and you would still be well in profit of 11 R or even 10 R based off of this type of trade setup. So it doesn't have to be right every time right away for you to make money in the market. That's all for this video. I hope you guys enjoyed it. Don't forget to like, comment, and subscribe. I have a Discord link down in the description below where you can learn my strategies and techniques directly from me and how I trade it. I love you guys, and I'll see you guys next time.